The next slide is again Nasdaq composite, but here I'm using the concept of market breadth. You know, we've always read books on technical analysis which has RSI, patterns, the typical indicators, but can you actually combine sentiment with these traditional indicators? And that's what I'm trying to do today in this presentation. So this is the chart of the Nasdaq of the last 15 years. You'll see all my charts have 5 years, 10 years of data. I'm not trying to, confuse you with data of the last 1 year, which has anyway been very complex. I'm giving you data of the last 15 years. So if it has worked in the last 15 years, it will or is likely to work in the next 15 years, right? So this is the data of the percentage of stocks on the Nasdaq composite, which are trading above the 200-day moving average. You will be amazed to know that every time this number has got to a level of 10, it's been a buying opportunity. Rule, it's a formula, honestly. You simply can go out there and buy the Nasdaq or the Nasdaq stocks, and this has worked every single time since 2003. I'm giving you 20 years of data here, right? And 2009, obviously the worst period, this number hit a level of about 4.5. So 10 is usually the starting point to search for any divergence, and that's how it's played out. And look at these arrows which I've highlighted here. This is when the bottoms happened, and this is when the moves played out here. Okay, and same thing happened recently. We reached a level of 10. There was so much pessimism in the market that the Nasdaq needs to fall a lot more. Everything was falling off the cliff, and then you had this lovely rebound in the Nasdaq index in the last 6 months.